Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bertha, Hurt, and Lanny, your favorite dividend investors out here in all of social media, as we say every single week. Guys, we've got two stocks that I'm thinking, do I sell and just move on and get some better dividend growth in the portfolio? No, they're not stocks that we traditionally talk about selling, but they're actually in the banking industry, guys. Two stocks, I own a lot of them. Do I sell it and move on to another high yielding dividend growth stock?
I love this conversation. Smash that subscribe button, everyone. Give this video a thumbs up. Let's talk banking. Let's talk these bank stocks. There are some banger dividend yields here, so it's going to be a lot of fun to see how much income this is producing potentially for your portfolio on a dividend yield basis, and what the heck do you do with these investments?
Oh, yeah, guys. Again, we're filming this here on night of April 2nd. And, the stock market obviously is still very shaky. Tariff this, no tariff, tariffs, no tariff. There's a lot of things going on with that, sending the markets all over the place. Interest rates remain where they are at and more than likely will be at for the next 2+ months. So just keep that in mind, guys, until probably the June FOMC meeting. I say that because, again, it gets into banking, guys. So, we've always kind of talked about a lot of community banks here on this channel. Community banks always give you a couple of different opportunities when you own them. Some of them, increase the dividend, which is kind of what the point is of us buying it. The second pronged approach is usually a community bank is subject to getting acquired or merged, aka you get the premium when they do get bought out, because only the big survive in banking
Right.
long term.
Yeah.
So these are two banks I've held for, one for a very long time, definitely closer to 10 years than 5 years. The other one is closer to the 5-year mark.
Yes, and I own both of these as well. And you're right, the banking community, there's been issues with liquidity for banks too. Community banks have found it hard to get assets. They've been finding it hard to get deposits to lend out. So a lot of them have just kind of thrown up that flag, to your point, Lanny, and say, let's combine, let's have a merger of equal. I had one, I lost one of my community banks, and there was a little bit of a premium with it. They was just acquired, but it was an all stock transaction, so I didn't get the cash back. I have a stock of another community bank in my portfolio. That's completely unrelated to two of these, but it tells you what's happening in the sector.
What else was I going to say was, they used to have a tradition of growing dividends, and then really COVID hit and liquidity concerns, capital concerns, all those macro banking concerns kind of hit the industry. Um, and it's been very rare. Honestly, the last increase that these banks have gone through was in the year, I believe, of 2020/2021.
Yeah.
Um,
You can't say you need to borrow. You can't say you need to borrow at high rates and then use that to pay out a dividend. That's not what's going to happen here.
and in these two stocks, again, banking usually doesn't have a higher payout ratio. You might see, again, usually you don't see over 60%, but traditionally it might be in that 30 to 50% sweet spot, which you actually will see that on one of the banks here.
Yeah.
So what we'll do today, guys, is we're going to put both stocks on, and we're going to go through our banking and dividend diplomat stock screener metrics, the PE payout and, the growth rate plus yield. But we will also look at, when you think of banking, you really want to evaluate kind of the valuation based on the price to their book value. So the share price over their essentially equity value of the bank.
Yep. And that target is Uno, number one. So let's
Yeah.
jump.
You want it under one.
Yeah, that's right. That's where the undervaluation is, one less. All right. I realize we haven't talked about the names of the banks here, Lanny. Let's
This
kick
is over
it.
six. I own over 6,500 in total too of these two banks,
Yeah,
guys.
that's why I teased it earlier. This has a decent income-sized impact for your portfolio.
Huge, huge.
Yeah,
You're talking. I mean, you're talking 600. You're
yeah.
talking 300. 25+ dollars.
This isn't a small decision on whether you want to sell. It's you sell or sell, and you have to know what to do with it so you can put that income to work right now.
Yeah, Main Street Capital is kind of the one that's on my mind, but I feel like they are overvalued, so I don't want to sell possibly undervalued for overvalued, and then overall return is shoddy. But you would get the dividend growth more than likely. But guys, let's jump in.
I
That
digress.
first bank is Citizens and Northern, ticker symbol CZNC. Now, the first metric we'll look at before we get into the second bank and their first metric, they're trading at $20.04. They're actually up this year about 10%, which is astonishing. Up about 14% since last year, but only up 15% since April of 2020, guys.
Hmm.
But the EPS estimates based on Seeking Alpha are about $2 a share. So you're looking at just a nice flat, like 10 PE, really, for this bank.
All right, flat 10 PE ratio. Their dividend.
Well, what
Oh,
about
oh,
the
sorry, I forgot. Yeah, let's jump
second
into
bank?
price to book ratio. So,
Well, no, let's get into the second bank, Bert.
oh, okay. All right, the second bank here. My bad, Apollo. We'll go bank by bank. Let's do it here. This one, little bit different part of the country, not too far off from it. Ticker symbol is PFS. That is Provident Financial Services. So not that far. Citizens Northern Pennsylvania. Heading over to Jersey here for Provident Financial Solutions. And Provident, that price is 17.60. Earnings per share was $2.06. That's a price to earnings ratio of $8.54 is the price to earnings ratio. So it is a discount compared to Citizens Northern at 9.92.
Yeah, and they're down 5% this year. Provident Financial, they're up 20% since
Mm-hmm.
last year and up
Yeah.
42% in 5 years. The 20% a year is, okay. Again, 42%, I'd say it's terrible over 5 years, but comparatively to, the S&P 500, it's not that good.
Yeah, neither of them are. So that's a lot's trailing it, but that could change if the S&P 500 has a massive pullback here. So both of them underperforming the market. Both have PE ratios below 10. Should we talk price to book ratio while we're on the valuation front?
Sure, we can. No, let's jump down to that at the very end,
All right, we'll
actually.
save that for the end here. Let's go payout ratio here.
Hit them. Yeah.
Citizens and Northern's dividend is $1.12. Payout ratio is 55.45%.
Safe dividend appears for CZNC. They have room to continue to pay it, but again, just because of how high that is for banking, I don't see increases still to come yet for them in the future. Provident Financial on their side, they're about 46.6% of the payout ratio. Again, safe to pay the dividend, but kind of at the ceiling point for banking right now.
Yeah, it's the same reason you said for Citizen Northern, not expecting a dividend increase anytime soon. Neither of them have increased that dividend. To your point, it's kind of remained flat. 5 year dividend growth rate's kind of petering out here for Citizens and Northern and PFS. You've had several years of zero dividend increases, so it's bringing down that 5 year average. Citizens Northern 5 year average is 0.74%. Providence is 0.87%. But again, a lot of zeros are in there dragging it
A
down.
lot of zeros. Essentially, you got four zeros in there. So it's going to bring it down big time.
Yeah.
Yields, though, again, you're kind of getting paid then maybe for, just a fixed income essentially at this point. With a little bit of appreciation because you do get appreciation on the stock, but you definitely get paid well. Citizens in Northern, 5.59%. Provident Financial, 5.45%. So both stocks yielding close to and over 5.5% in the banking industry. Very solid yields. Again, you kind of need that when you have, limited to zero dividend growth.
Exactly right here. So let's move through. We already talked about the performance. Let's talk about that price to book ratio here. Again, you want under one to show you that sign of undervaluation. Citizens Northern price again is 2004. That book value is 1784. Price to book ratio of 1.12x, above that 1% mark.
Yeah, kind of above it. Again, not to say it's not terrible. If it was like 1.6, you'd be like, all right, that's brutal for a community bank that's been around for a
Yeah.
while. Provident Financial is actually below one. Their book value is 1993. They're trading at against 1760. So they're at a 0.88 book value. That's decently undervalued for a community bank.
Yeah.
Definitely, a big disparity. I call it big because it's 24 basis points different than Citizens in Northern. So definitely a more compelling argument on the Provident Financial side.
Yeah, so we'll put the chart up here that shows both the metrics side by side here. Again, both below 10 price to earnings ratio. Both have safe payout ratios below 60%. Neither have increased that dividend. With yields, both of them are right or Citizens Northern is above 5.5%. PFS is right below 5.5, but they're pretty much the exact same.
Yeah, so here we have it, guys. Again, two stocks yielding just about around 5.5%. I own over 6,500 just about of the stock. or stocks. Again, I wouldn't want to lose a ton of yield, but you kind of want to get somewhere in that 5% plus yield with 3 to 5% dividend growth. Again, I know there's realty income, but they've been a depreciating asset at this point. So I don't know if the growth is there. You would think it would be, with rates coming down, and REITs not directly impacted by tariffs, but yet their tenants are definitely impacted by tariffs.
Yeah.
Uh,
It's
so yeah, I'm kind of torn here, and plus that's taxed at your ordinary income rate,
that's right.
versus this is at your qualified dividend rate. So there's some nuances here that I'm toying
Yeah.
around with. There's Main Street Capital that I own, but again, overvalued in my opinion by about 5 to 10%. So yeah, I'm kind of,
Yeah.
let's say, handcuffed right now.
No, but there is the bull case also for the community banking sector too. We've talked a lot about the downside case here of what could happen. Banking could get dragged down, but there's also the community banks aren't involved in as sophisticated lending. You'll see a lot more traditional underwriting, so they might be a little more conservative, a little more insulated from a lot of the bad borrowers that are going to drag them down and are going to have the floor ripped out from underneath them if the economy slips into a recession. And then there's also what happens with the banking sector as a whole. We've seen buried within all the news a ton of deregulation, a ton of things to make acquisitions easier. So there's still a bull case for why the banking sector could pop, especially community banks that form mergers of equal. But that
Yeah.
there's also a bear case. Like it just depends. I don't know. It's a tough one.
Yep. Yeah. But they're not like extremely overvalued. If anything, I would say PFS shows some undervaluation with a lower PE, a lower book value, better payout ratio. It's not a terrible looking
No.
stock to even buy if you wanted to. But for me, it's just I want my income to grow, and that's what is lacking right now from these
Yeah.
two main stocks.
One less position too. So think about there are two if you get rid of them both. Less positions to file, less positions to monitor. So that's the real reason we're here.
Yeah, that's the real reason. Guys, let us know in the comments, what you guys think of banking stocks. Do you guys also own some community banking stocks that maybe have paused their dividend growth over the last few years? What have you done with them? Are you being patient, or did you move on to get dividend growth instead of just dividend yield? Let us know in those comments, guys.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
Oh, that was Bertha Hurt and Laney from the gosh darn dividend diplomats. Over and out.